Hey guys, welcome to the stream. I'm gonna keep this relatively short since this is solely for to explain the idea regarding compounding, right? Because I got two questions right after the video, right after the session. Let me just find them. One of them is Grabbing Benjamins asked, when I compound my position higher, my entry rises above entry 1 and PNL drops as well. Duh. That's how it should be. Okay, let's start with that. And Bolt said, so instead of TPing and re-entering, I should let the original position run and simply add to it until price reaches a high time frame TP or I see weakness. Okay, yeah, I'll go one by one. Okay, coming to Benjamin's. Let's share the screen this time. All right. So, look, first of all, compounding only works in a trending environment, either trending down, either trending up. I'm gonna give a trending down example because so that you guys don't get confused. Okay, let's say let's check the higher time frames first to make sure that we're on the right page. Let's see if we can find compounding opportunities at this point. All right. Yeah, obviously we have here. Okay, let's do this. Let's say we have the high time frame resistance, support resistance area here, deviation, resistance. All right, so I'm gonna rewind to here to find. Okay, so let's say you took this short, right? You took this short and you have the supply level here, right? Because after this level we had the break of the SR level and also break of this structure here. So that's our SD level supply. Okay, so the price came here, you shorted it here, and your position looks like this now. You shorted here, maybe towards this consolidation. Okay, this last consolidation that pushed the price up. Yeah, that's your trade one. If you think that this is just a beginning of a downtrend, or you know the downtrend will resume after that, so you don't want to lose this entry. Okay, so you can take partial profits here. First of all, I'm talking about only this time frame, daily time frame. In here there are many compounding opportunities you can find, but I'm just talking about this so we can understand the main concept first and go deeper into how we can apply it to lower time frames. So that's your first trade, but you don't want to lose this position, okay? And you want to compound. Basically, what you want is you TP part of it here at the last, because this is the consolidation area. You want you're expecting a reaction, okay? Then when you take it 50% TP here, then your entry here becomes there. All right, this moves higher. That's why without moving the stop right now, because you have no reason to do so. You can argue that I can move the stop here to entry. Just a sec, our entry is not there. Yeah, our entry is here. Our entry is here because that's the supply, and then we shorted it. That's the, so basically that's that. Let me do it again. So when you TP here, your entry here moves there somewhere. No, I don't know exactly where. You should, depending on your position and how much you TP, but it's gonna move somewhere there. It's not gonna be there. And now we're looking to compound on this position. Okay, what we need for that, we need to see a structure break. So what happens here is we're in an uptrend, right? Uptrend, uptrend, uptrend. So this is the correction, but the correction hasn't ended. When does it end? Here at this breakdown, and it broke this structure. Then you can look to either enter here again or look for a pullback into the level, depending on your risk appetite or entry style. So what happens here is, let's say that was the supply region that broke this area. So basically I'm entering here. Can you see the supply there? Can you see this supply zone here? So I'm entering there basically here, and my stop is there. You can use this one also, but this is more conservative one. Normally you should be able to use the supplies top. So what happened here is your entry was here now, right? And when you entered here again, this entry with the compounded position goes down there again. Wherever, I don't know. But when you add the position lower, your average must bring down, right? Must come down. When you TP, your average goes above, like the opposite direction in your favor, and this is against your favor. But now you have this position, half of this position already running, you TP'd half, and you added maybe that TP, whatever you TP'd here, there. With the invalidation up here, or for aggressive traders here. So basically this position is riskless now. You only have this portion of the position in risk. Even if the SL get hit, this position will be stopped out, but this position in loss, but this position is gonna be probably break even. But you already TP'd, so no problems here. And of course, your TP here should be below that, right? Because now we're playing the high, lower high, low, and then now we need to break this, because that's a downtrending market. We got the reaction, now there's nothing there. You can also add here, right? Now let's see where else we can add to position. For example, here we have SR level, right? We had to come here, we had to come up. It's still downtrending market, we can still enter here, right? We can still enter here. Compound more here. Your entry was somewhere here, average. Now your entry will come towards there somewhere, and your SL should be around either this high, right? And when it breaks down, you can compound again. Either wait for the pullback, which you can, I think you can find a reason to get involved at this breakdown in a lower time frame. So basically I'm playing level to level. Take profit here, short the pullback, compound the position. Whenever you take profit, your average goes up. Whenever you enter back, your average goes down. And the idea here is that this was your initial entry, that was your initial stop. Now this trade, whatever left in here, is riskless at this point. Actually, at this point it's even riskless. And now you're running a bigger portfolio, a bigger position with only this position's risk. And then when it breaks down, comes back up. For example, when it breaks down, your SL can move there. So this position is also risk-free now. So you can start another position. Like if your position is your risk is 2% per trade, let's say, you risk 2%, right? For example, you have a 10K account. This is $200 risk, right? This is also $200 risk. But these are riskless now. So when you enter there, you can take another $200 risk. Because these are not risk anymore. These are already covered. Even if the trade goes against you, you're gonna be only risking 200 for this trade, but not for these, because these are already in profit and you took profits here. Again, if you take profits, partial profits here, then your average is gonna go up. So even if you get stopped at this point, you're gonna be in profit. Does it make sense? And if I go in, I can find other reasons for you. For example, here, that breakdown, that was the stop. After that, if you enter here, I would keep my stop there. And then when it does something like that and breaks this, I would move the stop there, risk this position, because that's broken down now. Does it make sense? So I think I answered both questions in one. That's the reason we don't blindly short or long. We want, for example, in here, if you try to compound prematurely, then you're gonna give away the profits that you made here. Why? Because obviously there is this uptrend going on in this time frame, right? We have an uptrend going on. Why would you even want to short this? But then again, when it comes there, you see it's a deviation, get back inside and breakdown of this. And this consolidation is now resistance. You compound here, invalidation here. See, I can tighten up the invalidation now. And then play this. It has taken out this high here and start breaking down. That's another compounding opportunity. Invalidation here, right? That's broken down. So you can move the stop there. See, riskless, gone. Then you can start another position here. When it breaks down, you can start another position here, move the stop there. You just need to understand, and you just need to be patient with these. Why? Because first of all, if you look at the lower time frames so much, then you'll be like, okay, I want to move the stop here, move the stop here, move the stop here. Then you just, it takes you out and then continues. Because price, when going down or up, it likes to squeeze. It likes to, if it's like too many objectives lying around there, at some point it's gonna do this. And that's one of the best entries you can get, because that's taking the liquidity and then breaking down from here. Then you can move, because objectives gone. Now you can enter and then use this as a stop, for example. Because the main trend is still down. So don't get confused with this. If you look at 4 hour, for example, those things don't really matter. So you always need to keep the higher time frame in your, you see, this is down move, this is correction, this is another down move. All this is noise. So when you see this build up, you can expect the squeeze. Also, you know, that's an SR level here. When it hits an SR level, is it an SR level? Here, 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 deviation, here, here, and then you expect the squeeze. And when the squeeze is complete, and then it starts turning back, lower high, get in, invalidation. Breakdown of this, comes back up, lower high, entry, SL, target lower. Does this make sense? You can only compound when it's trending. You cannot compound when it doesn't have to be a daily time frame. You can compound on the 5 minutes. You can compound on this. You know, you enter here, invalidation there, and then maybe TP some there, right? At this point, TP some there, your entry goes down there, and there is another breakout of this triangle, and also this level. Breakout, hold. When it's pushing up, either enter again or move the stop there. This position is risk-free now. This is a new position. And if it just, you know, either you can finalize the position there, depending on your trade expectancy, or if you're like, if you're swing trading this, then you should probably be more careful. you need to understand, you know, the consequences of keeping the trade open. See, for example, that's a structure break here, which is not good. And also that kept me a range bound environment, right? Which it was. So depending on which time frame you're compounding, you need to be aware of the high time frame structures. Like here, this was a high time frame structure here. So yeah, that's I think that's about it. This video is what, less than 30 minutes, which is good. So yeah, just so the times that you can compound is this, and not that. Okay, you can even compound on this, on the lower time frame, because that's also trending structure. You can also compound on this. You just need to be able to, like, when it hits a level, just take profit and then look to enter again. Look what happened here. The price broke the level, hit the target, you didn't take profit, it comes out, you want to short this, but what happened then? It squeezed this, lost the level. That's where you compound, that's where your invalidation is, and then these are just areas of compound. And I wouldn't compound here personally, because coming there again is not good for me, but with the compression going on there, if I see a run, then I would compound, use this one as new SL. All right, so that's that. I hope it is clearer now, and I would like to hear your thoughts.